If you're a Palantir investor, you might have heard of a podcast called the All In Podcast, hosted by four billionaires that have done very well in tech, Silicon Valley, great investors, pretty much four people that really have a lot of connections and have massive networks and have done massive things. Chamath Palihapitiya, David Sachs, Jason Calacanis, and Jason Friedberg. Now, if you're also a Palantir investor and you have consumed the All In Podcast regularly, you are probably thinking to yourself every time or every other episode, or at least one episode a month, that they talk about something in regards to artificial intelligence, machine learning, technology, data, etc. Seems like they're talking about Palantir. It's like a deja vu moment that almost every Palantir investor that I know that has watched the All In Podcast has had. I mean, this weekend, the podcast that just came out, it's almost as if they were speaking about Palantir without saying the word Palantir, and I had literally 10 people DM me back and forth saying, yo, did you hear this? This sounds like Palantir. And these are people that work in the data space, so they're able to sort of conceptualize how these sort of investors, capital allocators, are talking about data, and also from the tech side, how they're interpreting what they're talking about when it comes to data. A lot of times on this podcast, which is a very influential podcast, top 20 podcast in the world, it seems as if they're talking about Palantir without mentioning Palantir. Now, the interesting thing is in this segment, they're going to be talking about Databricks, which is a private company valued at $38 billion that acquired Mosaic ML at $1.3 billion to essentially build AI infrastructure. The current moat and bull case for Palantir, the reason Bank of America increased their price target from $15 to $18, is that Palantir is one of the most unique companies in the world and one of the only companies in the world that can truly build secure and trusted AI infrastructure for an enterprise. They don't mention Palantir at all, and it's interesting because you would think they would bring it up. For example, Google, Amazon, Meta, all these big tech names get mentioned in this podcast. And one would argue that if Palantir becomes a $100 billion company over the next 10 years, then they're going to have to bring it up. Like, it's one of those companies that's in the zeitgeist of technology. It's not this black box company that's just kind of out there. I mean, for goodness sake, these guys bring up Snowflake all the time. It's interesting why they almost never talk about Palantir, especially with David Sachs being one of Peter Thiel's best friends. He helped him build PayPal, and Peter Thiel is the executive chairman of Palantir. It's hard for me to sort of conceptualize that David Sachs has no exposure to Palantir, that he doesn't even know about the company, that Peter Thiel wouldn't give him a nudge and be like, hey, at $6, this is a good deal. You should probably think of, putting some Palantir in your portfolio. Or someone like Chamath Palihapitiya. So let's take a look at this segment. It's going to be really interesting what they get into, and I want to analyze why I think there is such a unique relationship with what they're talking about and Palantir, and ultimately how that impacts the global data markets.
These items, the AI frenzy continues here in Silicon Valley, all the way from early to growth stage funding through to M&A events. We saw this week Databricks, which is a privately held data infrastructure company, announced that they were acquiring Mosaic ML for $1.3 billion. That headline number is based on a cash and stock purchase price, where the value of the stock that was being used to acquire Mosaic ML was based off of the last round's valuation for Databricks, which was $38 billion from a fundraising that they did in 2021. So arguably the valuation should be lower and the overall purchase price could be considered lower, but that's besides the point.
So again, Databricks was valued at $38 billion in the private markets, and I saw that when Alphabet and Google, the same, Meta, Amazon, a bunch of these guys invested in them. Now that valuation is probably around $25 billion. So the acquisition at $1.3 billion is using the last valuation stock price. It would be more so around $750 million because a lot of the acquisition was done with Databricks stock as well.
Mosaic ML, as you guys may remember, is a company I mentioned a number of episodes ago, led by the founder of Nirvana, which was an early AI business that was acquired by Intel. And then he started Mosaic ML, and he offers open source models. And I shared the performance data of their most recent announcement on the show a few weeks ago. There's rumors, I don't have any confirmed reports, but there's rumors that Mosaic ML saw their ARR grow from $1 million to $20 million since January. There was other rumors that said they were only at $6 million of revenue. Regardless, Databricks is paying a pretty hefty premium. And I think it begs the question, what do data infrastructure, database companies end up looking like in the future if AI has to become part of the core infrastructure of every enterprise? And this is creating a big shift. So Sachs, as our enterprise software investor expert, maybe you can share with us what this means for the sector. Does this buoy excitement for AI infrastructure startups? Does this change the investing landscape? Is it just reinforcing what folks are already doing?
I think it's a reinforcement. I mean, this space is probably the hottest space. We were talking about like AI infrastructure for enterprises. I think it's probably the hottest space right now in venture land. We actually looked at this deal. We had a small allocation in their next round. They had a term sheet for a Series B. Emergence was actually going to lead it. And
this is Mosaic ML?
Yeah. Mm-hmm. I don't know if I'm supposed to be telling you all this, but
it's done now.
The bridge. Yeah, go ahead for it. Yeah, it's totally
this
fine.
is great. This is why people tune in.
Breaking news.
Breaking news.
They had a term sheet from Emergence to raise $50 million at 400 post.
Wow.
And we were going to have a small allocation in that. And as I recall, the valuation was somewhere around 30 to 35 times ARR, which actually is not that insane for a very fast growing company in a hot space. So that implies about 10 million of ARR. I don't remember the exact figure, but I think that's sort of the ballpark, but growing very, very quickly. I mean, up from like 1 or 2 at the beginning of the year.
Right.
So I actually understand why someone would want to acquire or invest in this company. Like I said, I think we wanted to invest. And while we were sort of, trying our best
you didn't say anything when I talked about him on the show a few weeks ago. You were just sitting there, mum's a word, or?
Actually, I knew that this deal was basically in the works because the founder called us up and he had already promised us a small allocation in the round. Naveen did. And he called up and said, actually, I've got this deal. So we're putting the round on hold. And so I didn't think I should say anything because obviously it was still ongoing. But yeah, we knew about this deal that was kind of coming down the pipe. I didn't know for sure that it would happen. But yeah, we heard it was in the ballpark of this like $1.2, $1.3 billion number, which like you said, because Databricks is a private stock, maybe it's only 50%. Half of that or 750 or something like that. Who knows? It's still a great deal. But, a lot of people are saying it's a crazy deal. I don't think it's a crazy deal because before this happened, after Naveen signed the term sheet for the Series B, an investor came over the top to invest at a $700 million valuation.
Oh, wow.
So people were kind of going crazy. Now, I don't think that's necessarily irrational behavior. I think that's more of evidence of a mania going on. But I think that what he got offered is obviously a fantastic deal. And I think what it's evidence of is that these big enterprise infra companies are going to try and build an end-to-end tool chain here. And I think Mosaic ML had a very, very important part of the tool set, which is training up these models.
Now, this is incredibly important, okay, before we get back into it. When he says these tools are going to build end-to-end infrastructure, and they're all going to have different elements of that infrastructure that they build, that is where the value is. When we talk about a $1.3 billion acquisition, this is a company that's only worth $38 billion, probably $25 billion if you give them a public market valuation. Spending $1 billion on a company is not an easy thing to do. It's not an easy thing to justify, unless you believe that this is not Google spending a company for $1 billion or Meta buying WhatsApp for $19 billion, right? This is a startup at the end of the day that still has to prove it is a viable company, saying, hey, we are seeing where the world is going in regards to the data. We are seeing the infrastructure that enterprises needs because they're B2B, they're selling to B2B, right? They're B2B clients. They have business with other businesses. So the business of selling to other enterprises is their utmost priority, and their ability to give them relevant infrastructure, relevant tools that allow those businesses to be effective in the new modern era that we're entering into, this fourth industrial revolution of artificial intelligence, that is the significance of a company like a Databricks, of a company like a Palantir or a Snowflake. And so when you're crying Mosaic ML and the sort of core value proposition is that they have end-to-end tools that allow you to train the models in a meaningful way. Again, they're not models, they're infrastructure to be able to train the models, which requires all the confidentiality, regulatory framework, security, all that stuff. There is something that Databricks is seeing in Mosaic ML to add to their war chest to then be able to sell to clients to be able to deliver the solutions they need to do. That's exciting because Palantir is doing all of that already. Now, I don't know if they're doing it in the exact way Databricks is doing it. Obviously, there's a lot of nuances here, but if Palantir is doing that to an extent in some unique way, and they have actual clients, and Karp is saying they're going to start to generate revenue from that, you could imagine that they are ahead of a lot of other companies that are doing this, especially, companies like Snowflake that are saying they're partnering with NVIDIA, and they're buying these other companies to help them be able to do this. Palantir's doing it right now. And that speaks to the speed and innovation of a company that's been able to take an idea to product, right? They launched this in April, conference in June, clients showing off how they're using it within 2 months. it shows you the speed of how quickly they realize this is going to be a big thing and how the rest of the market is now catching up to be able to implement this. And if this is the case, here's the big bull case. If the rest of the market is catching up to be able to do this, like big players on the private market that are theoretically valued more than Palantir in their last valuation, then that means this is a real market opportunity. This is a real TAM. Like, it's not just some joke that they're acquiring a company for $1 billion. There's like, no, their clients say, hey, we need this. You don't have this. If you get this, we'll be more likely to buy from you. And as a result, they're going to get the thing that they need to get, acquire it in order to be able to get the job done. So it's just proving the market opportunity and showing the speed at which Palantir has been able to start capitalizing. Hopefully, we'll see in the numbers on this opportunity.
Basically maximizing GPU efficiency, because GPUs are basically the scarce item right now. We have a GPU shortage, and it's probably not going to get better for a year or two, if that. So this is a very important part of the stack, and I think it's probably a smart acquisition for both.
Yeah, it
Databricks
seems to me. Remember
Mosaic.
Snowflake, which competes with Databricks, also acquired Neeva, which was founded by one of my colleagues, a guy I work with, and knew, a really great guy, Sridhar, for $150 million last month. That deal was announced.
By the way, I didn't know it was $150 million. I don't know if that was disclosed in the SEC filings. This is the first time I've heard it was $150 million. So not a small little fee to acquire Neeva. I mean, to Snowflake, maybe it's small, but $150 million, decent amount of money.
And the pattern recognition that seems to emerge here is that if you're in the data infrastructure business, it seems like it's becoming critical to level up, that it's not just about storing and moving and manipulating data, but the interpretation of data through models.
Where have we heard that before? It's not about storage. It's not about just making sure the data sits somewhere. It's about making sure you get insights from that data. Models help you understand what the data is talking about. And to do that, you need AI infrastructure, and that seems like Palantir.
And the tooling to build those models becomes a critical component of all of these toolkits that these software companies have to provide to their enterprise software companies. And it's a big leveling up that's necessary, which seems to me there's other companies out there like them that are also going to need to strap on tools like this to make themselves competitive in this marketscape, which means that there are more acquisitions still to come.
Yeah.
Chamath, JCal, you guys agree or have a different point of view?
Looking at it, it's a big number, the headline number, but I agree with Sachs that the actual number's half the number. So if it was, if you look at the number of engineers they had based on LinkedIn data and PitchBook data, probably 60, 70 employees, 80 employees, and then 40, 50 of them are engineers. So that puts it at $30 million per engineer. And that's one way to look at these acquisitions. And I think, probably $3 to $10 million per engineer for like really high-end engineers is more the going price. But if this is half that amount because they bought it with monopoly money, in other words, their 2021 price for their company, it's great. And I think you nailed it, Friedberg. What's happening is this layer of natural language on top of any service, whether it's something as simple as Yelp or something as complicated as a giant financial company with tons of transaction data, being able to talk to it and understand it, and then have your machine learning team build tools so business owners don't have to hire data scientists. The actual business leaders can talk to the data and get back answers, or just say, hey, tell me about our customers. How have they changed over the year? And then, hey, that's pretty interesting. Tell me more about our customers. And, how are they reacting to these 3 new products? And you will get back intelligence that previously was unable to be accessed. And so and
this is a really big point, right? This is the whole paradigm that's changing between how humans engage with software. Every single software company in the world is going to have some type of user interface that allows either their internal teams to engage with their company's data to be able to make better decisions, get insights, everything JCal's saying right here, or on the consumer-facing end, consumers are going to be interacting with software companies in terms of how they interact to get data from those companies, to get information and insights through some type of LLM, because it's just going to be more efficient and faster. And if you don't have it and your competitors do, it's going to be a better experience.
I was just at Sequoia yesterday or 2 days ago, with the latest 7 graduates from our accelerator. We bring them to meet with Sachs and his team. We bring them to meet with Sequoia. And when we were at Sequoia, I realized that of the 7 companies, 4 of them would not have been possible before these machine learning APIs were available. And OpenAI is but one. There are now, in the companies I'm talking to, they're trialing Friedberg on average 6, 7, 8 language models before they pick one, and they're not picking OpenAI every time.
And this goes to the point that a lot of these models are commodities. A lot of the information is the same. A lot of the models can be trained in the same way. And then it's just a question of which one costs less for me. So, and CodeStrap did a video on this a long time ago, but if the models are commodities, which by the way, this was talked about on the Olin podcast by Chamath, about 7-8 months ago. If the models are commodities, then the question becomes what allows the tooling for those models to be trained in a unique and differentiated way. The data that's proprietary within an enterprise creates a model that's not a commodity. And the only way for that data to be trained in a proprietary way is the tooling, the infrastructure that these guys are talking about, that securely allows the data to be introduced into a model that then spits out the correct results, which means commodities are not where the big market opportunity here is. I think it is the infrastructure, and that's kind of where Palantir is playing.
Putting that aside, these businesses were not possible before this technology was introduced and available via API in the last 6 to 12 months. And I think there's a bunch of businesses that economically would not work that now work. I can give one example. There are countless meetings that are recorded over Zoom, right? Think like a local school board meeting. Well, nobody could ever make a database of all the discussions going on at local school boards and then analyze all that. But now, because all of those are saved on Zoom and they occur on Zoom and they're available for public record, you can ingest every single one of those and then build a Bloomberg terminal of every discussion happening at every school board everywhere in the United States. And do that with ChatGPT or any of the language models and then get really great insights from it. That would be too costly to transcribe at, $100 every hour or two and normalize, let alone to analyze. And so I'm looking at businesses as an investor. What I'm looking at right now is businesses that were previously not economically viable before this technology and then that are now economically viable, if that makes sense.
All right, we'll leave it there. I think that's a big point by J. Cal, basically saying, look, a lot of these businesses didn't exist before, and now these businesses, that Zoom example is very, very good, take millions and millions of meetings, put them into this type of model. That model then gets trained on all that proprietary data, and then you ask, hey, on March 15th at the parent-teachers conference, what was the discussion about blah, 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 and you get an answer immediately. I mean, that is where the world is going, not just for parent-teacher meetings and school conferences, but for everywhere across the world. You can imagine the use cases, they're just endless. And so the question becomes, do you have the tooling and infrastructure, whether you're a school board, a governmental body, or an enterprise, to be able to build that type of a model to then drive the efficiency and results and basically save costs and increase revenue as a result of the implications of what that model would do for a company in a meaningful way? And that's where I think Palantir is playing. And so JCal, as a VC, he's talking as a capital allocator. He's looking for businesses that weren't possible before that are now possible because of this technology. And I think when we look at AI infrastructure, that's essentially what's being done. Before, you couldn't make an essay in 3 seconds by giving a couple of words to a language model. And now with ChatGPT, you have an essay that's ready and it's done. And the implications of that across every other business in a host of variety of different ways creates all these new opportunities that didn't exist before. But the tooling and the infrastructure is the moat that allows those opportunities to exist, not just the models because they are commodities. And it's just funny that, the Olin podcast is talking about this and they're just not mentioning the one player that I believe is building the infrastructure to be able to execute that at scale. And it's not in the works. It's happening right now. It's done. It's in the hands of clients. And in Q2, we'll see, how much customer count is increasing as a result of that. So those are my thoughts. The Olin podcast continues to speak about Palantir. Let me know your thoughts in the comments. Please subscribe to dailypalantir.com/subscribe, my email newsletter. Thank you all for listening and watching. Love to know your thoughts on how you think of the Olin guys continuously talking about Palantir without talking about Palantir. I'll see you guys in the next one. Thanks.